Hello everyone, this is the pre-market report video for today 17th August 2023 in the Indian stock market in terms of Nifty and Bank Nifty. More or less, yesterday's Nifty price movement was similar to the one that happened on Monday. Nifty opened a gap down of 65 points, but during the day it regained all its losses and moved almost near to 19,500. In the end, it settled at 19,465. Mainly, IT, auto and pharma supported the market, while banks and metals dragged. Here, in the last pre-market video, we discussed this. Infosys got the new service order in Europe, which in turn made it to close really positive. As we know, in Nifty index, Infosys got more weightage than TCS. So, yesterday, Infosys was the major positive contributor for Nifty. Then, about auto, Indian government approved 7 billion US dollar scheme to buy 10,000 electric bus and planning to deploy in 169 cities. Thus, this made all the heavy duty auto and its related stocks super bullish. In case of pharma, Lupin got the US FDA approval for blood pressure and heart failure medicine. This supported the whole pharma sector. So, the takeaway is, though overall global sentiment dragged the market in the opening, individual stock fundamentals supported the market. Overall, the advance decline ratio was exactly near 1. So, almost same number of stocks both advanced and declined. Then coming to institution activities, it's a little bit tricky. If required, please pause and see here. Normal FII's daily trade value is around 8,000 to 10,000 crore rupees, but yesterday it was over 20,000 crore rupees. This is because Adani's Mauritius Cell Company sold Adani Power shares worth of 9,000 crore rupees to GQG partners. So don't think it's abnormal, it's just that one heavy transaction. Other than that, FII was still net buyers. The net bought for near 720 crore rupees, whereas DIA net bought for over 2,400 crore rupees. This is what happened in Indian market yesterday. Now moving on, before the US market opening, US Department of Commerce released the various housing data. All of them came as somewhat okay and not super duper good as investors expected. Here, I don't want to bore you guys by telling everything, but like to highlight this one. Average 30-year mortgage rate increased to 7.16% from 7.09% in June. Here, this number is the highest mortgage rate in US since 2001. This mortgage data slightly made investors happy since increasing further interest rate hike will result in further increase in mortgage rate. So it made all three US major index to open marginally positive. However, in the US afternoon, Fed released the last FOMC meeting minutes, and as per that, now FOMC members divided into two. One half want to increase the interest rate further so they can control the inflation. However, the other half don't want to. But both of them agreed on one thing, that there is no longer the worry of mild recession in 2023. Now, this increases the 10-year Treasury bond yield to over 4.25%, which in turn made all the US market to close negative. At the end of the day, Dow Jones down by 0.5%, S&P 500 decreased 0.76% and Nasdaq crashed 1.15%. In case of VIX, it increased further and moved near 17. Regarding oil, we know at present the oil rally was mainly due to Saudi's oil production cut of over 1 million barrels per day. Now, last night EIA, US Energy Information Administration, released the weekly report. And as per that, US inventories got huge stockpile. In addition, usually they export between 2.5 million barrels. Now, last week they exported over 4.5 million barrels. Above all, their production data reveals that now US is producing 1 million barrels per day, more than the last month production. This, along with the weak Chinese data, crashed the oil price by over 2%. At the time of this video, WTI crude oil moved and traded below $80 per barrel, and Brent crude oil was trading around $83 per barrel. Coming to Indian ADR, despite the US Nasdaq closed negative, Infosys closed near flat, whereas Wipro increased 0.4%. Then, in case of banks in Indian market, both of them closed negative, but still ICICI Bank ADR in US closed positive. So, I consider this as neither positive nor negative, more of a indecisive. Regarding GIFT Nifty, it closed near 19,412, which means it's kind of indicating 50 to 60 points gap down opening. So, this is what happened in the global market. Now, let's move to the India related info. First, yesterday, two rating agencies, one Fitch and two S&P, both released the positive report about India. I mean, Fitch said Indian banking stocks are really very strong and they got the appropriate buffer against all potential stress. Here, they are saying good about the banks. So, will it stop the HDFC Bank from bleeding? Don't know. We have to wait and see. Then regarding S&P, they kept India's growth rate unchanged, and in addition they said on an average India will grow by 6.7% GDP every year till 2030. Here they were very bullish on IT service sector. Second, Aurobindo Pharma, the first Indian pharma company, got US FDA approval for dispersible tablet formulation. So I consider this is very positive for that particular stock. Then the third, Alibaba's Ant Group sold near 10% of Paytm stock to its CEO Vijay Shekhar in the off-market transaction. Here I consider this as positive since CEO is buying 10% of the company, so he is very optimism on the future potential growth. Finally, Amla Raja Batteries said that they are going to expand their business to two-wheeler sector as well. Again, this also I consider as positive. As a summary, for the moment, global momentum turns neutral to negative because of FOMC meeting minutes, and also for the moment, GIFT Nifty indicating a 60 points gap down. But however, there are some rating agency India related positive news. So let's see. Then about the things to look out. There is not much that I am aware of before and during our market hours, but in the night, again, various US housing related macro, usual weekly jobs data and Philadelphia manufacturing index are due. Coming to technical, first for Nifty, again it's a very mixed signal. I mean, on the daily chart, Nifty forms a long green candle with minor upper and lower shadow, and this formation indicates at the market low it keeps attracting buyers as buy on dip action. However, on the other hand, it closed below 21-day exponential moving average at 19,521. That's the first negative, and the second RSI value still got the bearish crossover. So Nifty expects to trade in the range 19,250 to 19,600. If it breaks above 19,550 to 19,600, then the short term target or the next resistance is 19,992. Whereas breaking below 19,250 will increase the selling pressure. Then in case of Bank Nifty, again it too forms the similar candle, and at present it got two back-to-back support level in the downside. First 20-week moving average 43,800 and the second 100 daily moving average 43,600. So if Bank Nifty closes below the 100 DMA, then that will be the huge negative and then it will increase the selling pressure. On the positive side, the first hurdle is at 44,000. Breaking above will push the Bank Nifty to near 44,300. Moving on, again like day before yesterday, maximum new and overall nearby put option is at 19,300. So 19,300 is the strong support. On the positive side, similarly, 19,600 got the maximum nearby both new and overall call option open interest. So that's the resistance to break. Then in case of Bank Nifty, still significant short straddle is at 44,000. Then nearby maximum put option open interest is at 43,800. So that's the immediate support. Breaking that, the next one will be at 43,500. On the positive side, 44,500 is the strong resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me build the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.